Good morning and thanks so much for joining in. You're watching Ask Profit. My name is Alex Matthew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. If you've got questions for us related to stocks and nothing else, if they're short term or long term, it doesn't matter, send them to us on the WhatsApp number that is on your screen right now or on any one of our social media platforms, particularly on the YouTube Live, and we'll get them answered. Before we do though, let's take a look at where the markets are right now.
Let me introduce you to the guests for today. We have Saurabh Jain, Equity Head Research at SMC Global Securities, and Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar. Welcome to both of you and thanks for joining in. Saurabh, I'm going to start with you. You heard Puneet talk about the commentary and the numbers on Siemens. Now, there are a couple of things that are happening here. There's a demerger aspect of it. There is then the order book that fell a little bit, about 9% year on year. There is also the fact that there is some, and that's on the back of deferment. Of course, there's also slowdown in the industrial automation product orders. Now, considering all of these factors, what's the long-term view on something like a Siemens?
Hi, good morning. See, long-term view on the Siemens will remain positive, but as you correctly said, that the company has been seeing some kind of a slowdown in their large orders, some slowdown in the automation segment, and one must consider that huge re-rating has happened in the last 2-3 quarters. I mean, the stock was, trading at 10 times to book value, and now it is trading in 19 times to book value. So I think most of the positives have been, have been quite largely factored in the stock prices. Well, view remain positive. The demerger is going to happen after 3-4 quarters, and that will give shareholder 1:1 ratio, and then the company will be focusing on both the two major verticals separately, which company feels that it would be beneficial for future growth that India is experiencing. Now, I feel that the gains have largely been factored in. There may be a 10-20% kind of a gain which may follow in the next 2-3 quarters. But I think it is a kind of a portfolio stock. If one is holding, then he can hold on to it. But I don't feel like jumping on to at these prices.
We've got a question from, I'm trying to get the name. Muralidharan from Chennai, and he's asking about Aurobindo Pharma, which he's bought very recently at levels of 1600, and he's bought as much as 550 shares. He's wondering whether to hold. I believe that the price might be a little wrong from what I'm reading it. 1,160 is what he has bought it at. He's wondering whether to hold on to this. So, and he's also looking for a target. Saurabh, what's the view on this particular counter?
I think the company is posting a good set of numbers, and the management has also guided that there will be a good growth going forward. Pharmaceutical sector per se is doing well. I think a lot of companies are launching new drugs and coming out with newer molecules. Even US is looking okay to many of the companies. In that context, I feel that it is good to hold for next 2-3 quarters.
All right. The next counter we're talking about is Tamil Nadu Mercantile Bank. This one's from Jason. Now, it's a recent listing. So, Saurabh, coming to you on this, for somebody who's holding these shares from the IPO price, if I'm not wrong, it has fallen since then, and
about 4.5% or thereabouts.
Yeah. So it seems to be that the viewer is in a bit of losses. Q4 results are out, not too much there as well. What's the long-term view on something like this? Would you suggest holding on to it?
I think on the banking sector, our view is positive, especially in the context that the RBI is not likely to cut the interest rate, which will help these banks to maintain the margin. Since it is a newer listing, I think it is prudent to wait for how the quarterly earnings pans out. I haven't seen the recent quarter earnings. I think if the numbers are okay, if the numbers are okay, then it is good to go.
All right. The next counter we're talking about is Parag Milk Foods. It's a 2,500 crore market cap company. The question from Satya: they bought the shares at a price of 202 rupees, slightly above slightly below what it's currently trading at. Saurabh, from a longer-term perspective, the stock has done pretty well in the last 1 year. It's almost doubled. What is the long-term view on something like a Parag Milk Foods?
See, all the companies in the dairy markets are seeing stable pricing for the milk, and they are venturing into the newer products. Dairy product. Apart from dairy products, they are adding newer products to their kitty and expanding their geographies. and that is what that is the reason behind the strong operational performance and the rally in the stock. I think it is better to hold this stock for another 3-4 quarters.
Fair point. That's the view on Parag Milk. We have to slip into a very quick break, so do stay tuned, viewers. We'll be back on the other side to take more of your questions. Welcome back. You're watching Ask Profit, and we are taking the next question from Srijaya. Srijaya points out that based on advice that she got on Ask Profit, she bought HCL Tech at levels of 1650, and I believe at the time she must have bought it from the long-term perspective, and the stock has dropped as part of the drop in the IT pack as a whole. For the year so far, and I'm looking at the year-to-date returns, it is down about 10% or thereabouts, and she's bought at slightly elevated levels. I'm going to come to you, Saurabh, on the fundamentals of this. We've seen the entire IT sector lose ground for various reasons, but at around 1300, would you suggest that she should average her holding and she should hold for the long term?
See, I would not suggest to average the stock, but at the same time, I would suggest you hold on to the counter. See, all these companies have shown good operational performance in the March quarter, but the guidance was weak in the context that the discretionary spending is not coming in the way the company was earlier perceiving. In the US also, the interest rate are likely to stay higher for long, which will curb the FSI sector to curb spending on the IT side. And in that context, I think the outlook has become bleak for all the IT biggies. So I think it will take another 3-4 quarters for these companies to experience to see growth coming back to the fore. So I think if she can hold for another 2-3 years, then there is no worry. At the same time, there is no point in averaging, because as of now, it is a contrarian volume.
A fair point.
The next one is Zomato, and this one's from Sri Kishore Sharma from Bihar. They say they bought the counter at a price of 192, so slightly above where it's currently trading at. This is from a 3-year perspective. So we just saw the fourth quarter results come in. Blinkit, it was a net positive EBITDA for the whole year for Zomato. So a positive sort of a sentiment there, but we did see a slight hit that the stock got after the results. But you look at Blinkit's performance, what a turnaround story that is. What's the long-term perspective on something like a Zomato from a 3-year perspective, if you have a target on the counter as well?
See, from the long-term perspective, I think it is a good play. You can keep it in the portfolio. See, the turnaround was quietly factored in by the market in the stock price in the last 2-3 quarters when the Zomato became EBITDA positive. Since then, we saw that Zomato has been marching upwards, and the valuations have now been close to 9 or 10 times to book value. I think at times what happens when the good results come in, bull unloading type selling comes into the picture, and that is what I think the stock is experiencing right now. I think in the few days the stock will settle down. From the long term perspective, I think you can hold on to this one.
Okay.
Next, there are two counters we're talking about. This one's from Vishwanathan Nair, and they're talking about Inox India. If this is a good time to enter the stock, and the second one is a recent listing, which is Aadhar Housing. Saurabh, if you've had a chance to look at Aadhar Housing as well, do tell us if somebody should buy a stock at the current levels. It's Inox India and Aadhar Housing.
Well, I will not be able to comment on the Inox India, but in the case of Aadhar Housing, I think the company has a mix of portfolio. I mean, salaried and non-salaried, in which the non-salaried portfolio consists close to 45%. The salaried portfolio consists of 55% in their landing, and they are reaching far out, tier 2, tier 3, and interior, lot of interior places, which deals and those loans usually deals with the higher delinquency rate also. So I think markets have their own worry factor, and that is why we saw muted listing today. So I think it is better to have a stock in the banking sector, which for a long time, like for example, a company like Union and Canva, rather than chipping into the NBFC like Aadhar.
All right. Unfortunately, as Alex mentioned, that was the last question for today. Thank you so much, Saurabh and Vaishali, for joining in and for answering all the questions for us. Viewers, thanks for tuning in on this edition of Ask Profit. We'll be back tomorrow to take more questions. But don't go anywhere. We have lots more lined up for you on NDTV Profit.